Good morning, YouTube. Happy Tuesday. Well. Bitcoin is back in the 39s. What does this mean for the markets in general? We're going to get into that. We're going to talk about what's happened over the last couple of days, take a look at the markets in general, and have a look at the liquidation levels for today as well. So if you are new here, welcome. If you are returning, welcome back. Don't forget to hit that subscribe button. Turn the bell notification to all so that you can be notified every time I upload a new video. Smash that like button and be sure to share this video with friends. This is the channel where we do honest TA, no bias. We don't care if price go up or down. We just want to be on the right side of the trade. Now, let's have a look at the market in general. So up here on the right hand side, this is Bitcoin. In my last video before the weekend, we had identified this M formation, which is a reversal pattern. As you can see, is currently playing out. Ethereum at the time was just holding its support, but over the last couple of days has broken down. Now it does have a chance of making it back down to this previous daily support at 28.3. If it can hold there, that's where we'll be watching to see if Ethereum gets its bounce. USDT dominance up here was a very key one that I talked about in the last video. If you haven't watched that, be sure to go back and watch previous videos because they're not just technical analysis, they're educational as well. So in that video, I was talking about the USDT dominance holding this support for I think it was 8 or 9 days. And this candle here, it had started to push out. So that was the warning to watch, because if the USDT dominance spikes up, it means that people are shifting out of volatile crypto into safety. They don't have faith in the market. So you can see we've had a pretty big shift over the last couple of days. This is not a good sign for crypto in general. Gold down the bottom here is looking like it's breaking that previous support. S&P did push up. It is currently retracing, which is fine as long as it holds above the previous resistance and flips it into support. That will be fine for the market. Dixie is a concern because it has broken out of that resistance and it is charging ahead. So Dixie is similar to USDT dominance. If they start pushing up, that's a signal that there is not faith in the market and people rather move to cash and sit on their hands. So we do want to see these two start to turn around at some point if we're to believe that the support is in for crypto. Now I am going to focus heavily on Bitcoin today because it does lead the market for crypto in general, and there's important things to talk about. On my last video, this dotted line here, this was the area of interest for us. This was where Bitcoin needed to hold in order for it to have a chance of bouncing and remaining bullish. Over the last few days, we did try to hold that level for a number of days and it was looking fairly good for a while there, but unfortunately yesterday we did break that level. So what does that mean? Does that mean we're headed back down to the 20s? Do we still have a chance of pushing up? Let's assess that right now. And what I want to talk about today is the W formation that we can see right here. And the reason for that is because this formation that we're looking at on the daily is exactly what we need to start looking at on the 1 hour time frame after this move down for us to get a hint that the move down is potentially over. Now, in case you don't know, W formations and M formation is a W upside down. But the M formations I trade at the top of an uptrend and the W formations I trade at the bottom of a downtrend. These signal a trend reversal and there's a particular reason why it happens, which is what I'm going to get into today. Now, a W formation usually forms after 3 hits to the downside. So you can see here we had 1 hit to the downside here, 2 hits to the downside here, 3 hits to the downside here. They usually come in 3s. After that, that's when you start to look for a W. And what happens on the last drop is we get a stopping volume candle. A stopping volume candle is this one right here. And what it is after strong momentum down, so big strong candles pushing price down, you have a fairly small candle with a wick to the bottom that literally stops the momentum of this move. How do you know that that's the candle? You know by the volume in the candle. So see here, it's a rather small candle in comparison to these big ones moving price down. It's a rather small candle with a wick at the bottom and it comes here with high volume. That's stopping the 3 hits to the downside. That is your first indication that a W formation may be forming. There's a psychology behind the 3, but the point being that this is where, unfortunately, many retail traders will open short positions. And the reason for that is because it's all done by design. You see the move happen first, you think, oh, Bitcoin's it's pulling back. Then you see the second one, you think, oh wow, it's got some legs. Then you see the third one and you're like, oh no, I need to find a position. And you end up taking a position at the worst moment possible. And the market maker knows that, and they trap you into a short here. Then they send price up and you start to panic. By design, you start to panic. You start to widen your stops, increase your margin. You convince yourself that this is just a retracement before a further move down, and you make bad decisions. All the while, the market maker is making this move to purposely trap these shorts. Then he reverses price and starts to head back. And at that point, you're thinking, oh, I did make a right decision. All I had to do was hold through it. We'll come back. When we get back to break even, I'll get out. The market maker knows that that's your thinking. So he doesn't let you get back to break even. He stops just short of it. This is by design. So by stopping just short of it, this creates the W formation. This is the second peak of the W formation. And he purposely stops short of the first peak because he knows that retail is thinking they'll get out at break even. So he traps the short positions here below price, and then he moves away. Now, how do you know that that is the candle that's creating the W formation? The exact same reason. It comes with a wick to the bottom and high volume down here. It's all by design. Now, what happens after a W is the second leg will break out of resistance and then it will come back for a retest. The W is valid for as long as the retest stays above the second peak. So with that in mind, where price is right now on a higher time frame, on the daily we're looking at, the W is still currently valid. Even though this sell-off looks really harsh, the W is still valid. If we draw fibs on that level, you can see here that price is currently at the 61.8. This is literally last hope. If we break down from here, then it's likely that we're going to come and chase the next weekly low, but we also have a chance of consolidating here for a few days before the market maker makes his decision on which way he wants the market to go next. Now, in an uptrend, it's exactly the same, but the opposite way. You would have 3 hits to the upside, create an M formation. The M formation is to trap people who are longing at the top, and then he sends the market down. That's why these are the only 2 formations that I trade. So looking at this now and knowing where we are on a higher time frame, we're going to go down to the lower time frames and assess what's happened there over the last couple of days. Now, during a whole week session, the market maker is going to take an attempt at the previous week high and also the previous week low. So last week we did get that high and we've been waiting for him to take out the weekly low. Previously, the weekly low was at 41,300. That was the level I was hoping we would bounce at once we broke the channel. However, over the last day, they have come down a bit further and it looks like they're trying to take out the next weekly low at around 38,950. Now you'll notice here we have 1 hit to the downside, 2 hits to the downside, 3 hits to the downside. Now you know what the 3 hits to the downside mean. So this is where we need to start looking to see if we get a W formation. Now it may not happen here because this has not started to consolidate yet. So you can't really draw a W from here. The W for all we know could happen down here at the bottom of the channel. So this isn't about where I think price is going to bounce. This is just simply about the formation that we need to look for moving forward. In an ideal world, what really needs to happen now is we actually move into consolidation, like what happened here. So if we pull that across, if we do something like that, it's going to give us the opportunity to assess which way they want to send the market next. And the reason for that is because the consolidation area, I call it the board meeting. This is where the market maker is assessing his position. He's keeping price in a tight range. If we use this area as an example, he's keeping price in a tight range on purpose while he assesses his position. He assesses where the liquidity is. He's looking at his profit. He's looking where he can take out other retail. And in the meantime, whilst this board meeting is going on, he's testing the upside with these wicks and he's testing the downside with these wicks. What these wicks are doing is inducing retail to take a position. What you have to remember is that at the time this candle broke down, when the candle was still open, there was a period of time that looked like a big scary red candle. Same with this. When that candle was open, there was a period of time where it looked like a strong bullish engulfing candle. That is done by design to induce traders to take a position. Breakout traders get wrecked here if they don't wait for a retest. So a breakout trader would have opened a short here and would have got stopped out on this wick. A breakout trader trader would have opened a long here and would have got stopped out on this move down here. Then they do one more final big strong push to trap more longs at the breakout again. Then they send price down. Now the smarter move is to take the retest. So a smarter trader would not have taken any move in this consolidation, but instead would have let this move happen here where price came back up and rejected that support, and they would have taken their short position here. But here's why most traders don't do that. That period of time was 2 days, and people don't have patience, and the market maker knows that people don't have patience, right? So the traders with patience made bank here. The traders trying to jump ahead here got stopped out multiple times. This is what we need to look for now. So in an ideal world, whilst we're waiting for a W formation to form, it might be here, it might be down here. In an ideal world, we want consolidation now. We actually want the next 1 to 2 days for nothing to happen, because whilst nothing is happening, now that you know the reason for wicks, you can be smarter about the consolidation and see the tricks that are going on. Now, if we do consolidate for the next 2 days, it's actually going to be very positive for the market because it could lead us into the midweek reversal. So we usually get a midweek reversal Wednesday, Thursday, Friday, Australian days, which is Tuesday, Wednesday, Thursday, US days. And that could actually be very positive for the market. However, it's going to take patience in doing nothing but watching for the next 2 days to see if we get it. All right, let's take a look at high block to see where we're sitting now. We currently have $21 billion worth of shorts at risk of being liquidated should the market turn around. These positions provide liquidity to the market maker. So once we start to get over the 20s, that's when we start to look for those W formations to see if a reversal may be coming. If that moves up into the 25 to 30 region, then I'd be a lot more confident that a reversal is coming soon. All of these blue and green lines up here show the short positions that are at risk of liquidation and what level they could be liquidated up to. We're looking at these big blue circles here. There's 162 million at 44,000. It's 141 million at 44,000 that still has not been taken out. We've also got this big one that's more recent at 41,700. Now looking below price to get a hint of will they drive the market down further before they turn it up. We do have longs that are still open at the moment that are at risk. Looking at these spikes here, these are the two major levels. That lines up with at about 39.9 and 38,000. Now 58 million, considering what they've collected in this whole move down already, they may not bother coming back for these lower levels. That's what we kind of have to wait and see. So let's go back to the chart. So what happens if we don't get a W formation and price just continues down? We would then have to break the weekly low, retest it, and then that would mean the market maker wants to come down for the next weekly low or potentially the bottom of this channel. So the good news is that the next weekly low is sitting at 38,300. So if we don't get the W formation here, we'll be waiting for it to happen at 38. For me, that's not a quality enough trade for me to take as a short down to the 38. I only look for high quality trades. So I would let that play out. If price from where it is right now continued down, I would just let that go. There's not a good risk to reward to enter it from where we are now. Let it find the support, then wait for this W to create, wait for this consolidation to happen so that I can assess what he's trying to do. If we happen to break that second weekly low, then I would be looking for the bottom of the channel as a possible short. But again, considering where we are when you zoom out on the daily and you really look at it for what it is, there really just isn't much in it to the bottom of the channel. So for me, I'd rather not take that play. If we were going to head down to the channel, I'd be looking for a W to trade it back up to at least this mid-level here, reassess there and see what I think my chances are of getting a breakout of that level and then an attempt at the weekly high again. So I hope that made sense. Sorry to bring you the bad news that I think we may be a little bit boring for the next 2 days. On another note though, don't forget when Bitcoin is in consolidation for a couple of days doing nothing, it does give the altcoin a chance to move in the direction that they want. If we do head into consolidation, I would shift to looking at altcoins, look at some high volume altcoins, especially if you can find some that's backed with some good fundamental news. You might get a good play there. Have an amazing day. Don't forget to smash that like button, leave me a comment below and hit the subscribe if you haven't already, and I will see you tomorrow.